Preparing for a business analyst at Capital One interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Walk me through how you would approach a Capital One business case interview. I would start by clarifying the objective, such as profit, customer growth, risk reduction, or operational efficiency. Then I would build a simple framework: revenue drivers, cost drivers, customer segments, and constraints. As data is provided, I would test hypotheses rather than analyze everything equally. I would do calculations out loud, sanity check the numbers, and synthesize frequently. At the end, I would give a direct recommendation, key supporting evidence, risks, and next steps. While answering, focus on structure, clarifying objectives, segmenting the problem, using data-driven hypotheses, calculating carefully, and ending with a clear recommendation tied to business impact and risks. Question 2. A Capital One credit card product is seeing declining profitability. How would you diagnose the issue? I would break profitability into revenue minus costs and losses. On revenue, I would examine interchange, interest income, annual fees, balances, spend volume, and customer mix. On costs, I would look at rewards, marketing, servicing, funding, and fraud. For a lender, credit losses are critical, so I would check delinquencies, charge-offs, and risk score migration. Then I would segment by acquisition cohort, channel, product tier, and customer behavior to identify the real driver. Make sure to cover profitability decomposition, revenue sources, expense categories, credit losses, customer segmentation, portfolio behavior, and how you would isolate whether the issue is volume, pricing, cost, or risk. Question 3. How would you estimate the market size for a new Capital One checking account product? I would first define the market: U.S. consumers eligible and likely to open a digital checking account. A top-down approach could start with adult population, banking penetration, digital banking preference, and Capital One's realistic share. A bottom-up approach could use website traffic, branch or app users, conversion rates, and expected account openings. I would then estimate deposits, interchange, fees if applicable, and servicing costs. Finally, I would validate assumptions using internal customer data and competitor benchmarks. In your answer, talk about top-down and bottom-up estimation, addressable customers, adoption assumptions, account economics, geographic or demographic filters, and how you would validate assumptions with data. Question 4. Tell me about a time you used data to influence a business decision. In my answer, I would use a STAR structure and emphasize business impact, not just analysis. For example, I noticed customer churn was concentrated among users who had not adopted a key feature within 30 days. I pulled usage data, built cohort cuts, and showed retention differed sharply by activation behavior. I recommended targeted onboarding emails and in-product prompts. After launch, activation improved and churn declined, which made the analysis directly actionable for the business. Be sure to mention the business context, your analytical approach, the data used, key insight, stakeholder communication, action taken, and measurable outcome. Use a concise STAR structure. Question 5. How would you evaluate whether Capital One should launch a new rewards credit card? I would evaluate the product from customer, financial, and risk perspectives. Customer analysis would test whether the rewards proposition is differentiated and valuable to target segments. Financially, I would model interchange revenue, interest income, annual fees, rewards cost, marketing expense, servicing, and expected losses. Risk matters because attractive rewards can bring both high-spend transactors and risky borrowers. I would recommend a pilot or A/B test, then compare approval rates, spend, balances, losses, and profitability by cohort. While answering, focus on customer demand, competitive positioning, unit economics, rewards liability, acquisition cost, credit risk, regulatory considerations, and test and learn rollout before a full launch. Question 6. What metrics would you track for a Capital One mobile banking feature after launch? I would separate product health metrics from business impact metrics. Product health includes feature adoption, repeat usage, completion rate, error rate, latency, and customer feedback. Business impact depends on the feature. It could reduce call center volume, increase digital payments, improve retention, or drive account funding. I would also monitor complaints, fraud signals, and accessibility issues. The key is not just whether customers click the feature, but whether it changes behavior in a valuable, safe way. Make sure to cover adoption, engagement, conversion, customer experience, operational impact, risk controls, and how you would distinguish vanity metrics from metrics tied to business outcomes. Question 7. Capital One is considering increasing credit limits for a customer segment. How would you analyze the decision? I would compare incremental benefit against incremental risk. Higher limits can increase spend, balances, interchange, interest income, and customer loyalty, but they can also raise exposure if customers default. I would segment by credit score, income, payment history, utilization, tenure, and prior delinquency. Then I would estimate expected profit, incremental revenue minus funding costs, rewards, and expected credit losses. I would also monitor fair lending considerations and run the change as a controlled experiment. In your answer, talk about incremental revenue, utilization, customer satisfaction, credit losses, risk segmentation, regulatory fairness, stress scenarios, and why approval should be based on expected value. Question 8. How would you explain p-value and statistical significance to a non-technical business stakeholder? I would explain that a p-value helps us judge whether an observed result may be due to random chance. If an A/B test shows a conversion lift and the p-value is low, we have stronger evidence the change caused the lift. But significance is not certainty, and it does not prove the impact is economically meaningful. I would pair it with confidence intervals, sample size, effect size, and business context before recommending action. Be sure to mention plain language interpretation, hypothesis testing, confidence versus certainty, sample size, practical significance, and why business decisions should combine statistics with judgment. Question 9. Write a SQL query conceptually to find customers with more than 3 transactions in the past 30 days. Conceptually, I would select customer ID from the transactions table, filter where transaction date is within the last 30 days, group by customer ID, and use having count greater than 3. The important distinction is that where filters rows before aggregation, while having filters grouped results after aggregation. If the business definition excludes declined or reversed transactions, I would add a status filter. I would also confirm whether duplicate transactions need to be removed. While answering, focus on filtering dates, grouping by customer, counting transactions, using having after aggregation, and clearly explaining query logic, even if syntax is not perfect. Question 10. How would you determine whether a marketing campaign for a Capital One product was successful? I would begin with the campaign objective: awareness, applications, approvals, funded accounts, or profitable customers. Then I would compare exposed customers to a control group to estimate incremental lift rather than relying on raw conversions. I would analyze funnel metrics, cost per acquisition, approval quality, early spend or deposit behavior, and expected lifetime value. A campaign is successful only if it creates profitable incremental customers, not just more applications from people who would have converted anyway. Make sure to cover campaign objective, control group, incremental lift, conversion funnel, cost per acquisition, customer quality, lifetime value, attribution, and post-campaign monitoring. Question 11. Describe a time you had to work with an ambiguous problem and no core answer. I would show that ambiguity does not stop me from making progress. First, I clarify the decision we need to make and the constraints around it. Then I identify the biggest unknowns and prioritize analyses that reduce uncertainty fastest. I communicate assumptions clearly, share early findings, and ask stakeholders where precision matters most. The best answer is not always perfect. It is a defensible recommendation that improves the decision and identifies what to monitor next. In your answer, talk about how you clarified the objective, identified assumptions, prioritized analysis, communicated uncertainty, involved stakeholders, and converted ambiguity into a practical recommendation. Question 12. A call center cost has increased sharply. How would you investigate what happened? I would decompose total cost into contact volume, average handle time, labor cost per hour, and staffing model. Then I would compare trends by week, product, issue type, customer segment, and channel. A spike could come from a new product defect, billing confusion, fraud concern, digital outage, or seasonal demand. I would also check whether digital self-service usage declined. Once the root cause is isolated, a solution may be product fixes, better communications, or routing improvements. Be sure to mention volume, handle time, staffing, channel shift, product issues, customer segments, seasonality, cost per contact, and linking operational metrics to root causes. Question 13. How would you prioritize multiple analytics requests from different Capital One stakeholders? I would prioritize based on expected business impact, urgency, strategic importance, and effort. A request tied to an imminent pricing, risk, or customer decision would rank higher than a general curiosity analysis. I would clarify what decision each analysis supports and what level of accuracy is needed. If resources are constrained, I would propose phased work, quick directional insight first, deeper analysis later. Most importantly, I would communicate trade-offs openly, so stakeholders understand the rationale. While answering, focus on business impact, urgency, strategic alignment, decision deadline, effort required, data availability, stakeholder communication, and managing trade-offs transparently. Question 14. How would you analyze customer churn for a Capital One banking product? I would first define churn clearly, such as account closure, inactivity, balance runoff, or product cancellation. Then I would analyze churn by cohort, tenure, acquisition channel, balance level, transaction activity, service interactions, and digital engagement. I would look for leading indicators like declining deposits, fewer logins, unresolved complaints, or repeated fees. After identifying high-risk segments, I would estimate retention value and recommend targeted actions, such as fee waivers, onboarding nudges, or service recovery. Make sure to cover churn definition, cohort analysis, segmentation, behavioral leading indicators, product experience, competitor factors, profitability impact, and targeted retention actions. Question 15. What is the difference between correlation and causation, and why does it matter in business analysis? Correlation means two variables move together. Causation means one variable directly drives the other. This matters because business decisions often involve investment, pricing, risk, or customer treatment. For example, high app usage may correlate with retention, but loyal customers may simply use the app more. To test causation, I would prefer randomized experiments, matched controls, or careful quasi-experimental methods. Without that discipline, we might spend money scaling an action that does not actually change outcomes. In your answer, talk about observed relationships, causal impact, confounding variables, experiments, natural experiments, and the danger of making expensive decisions from misleading correlations. Question 16. Capital One wants to reduce fraud losses without hurting customer experience. How would you approach it? I would frame this as an optimization problem. Reduce fraud losses while minimizing false positives and customer friction. I would analyze fraud rate, lost dollars, dispute patterns, merchant categories, transaction channels, and customer segments. Then I would review current roles or model thresholds to see where legitimate customers are being blocked. Potential solutions include risk-based authentication, real-time alerts, better merchant signals, and targeted reviews. Success should be measured by net fraud reduction, approval rates, complaints, and customer retention. Be sure to mention fraud detection, false positives, customer friction, segmentation, model thresholds, real-time alerts, operational workflows, and measuring both loss reduction and customer impact. Question 17. How would you run an A/B test for a new Capital One app onboarding flow? I would start with a clear hypothesis, such as a shorter onboarding flow will increase completed account setup without increasing errors or complaints. Users would be randomly assigned to control and treatment groups. The primary metric might be completion rate, while guardrails could include support contacts, fraud flags, time to complete, and downstream engagement. I would estimate required sample size, run the test long enough to avoid day-of-week bias, then decide based on statistical and practical significance. While answering, focus on hypothesis, randomization, control and treatment groups, success metrics, guardrail metrics, sample size, test duration, statistical significance, and rollout decision criteria. Question 18. How would you assess whether a branch or cafe location is financially attractive for Capital One? I would estimate both direct and indirect value. Direct economics include new accounts, deposits gathered, product cross-sell, customer lifetime value, rent, staffing, technology, and operating costs. I would also evaluate local demographics, foot traffic, competitor presence, and existing Capital One customer density. Indirect benefits may include brand awareness and digital acquisition lift. I would adjust for cannibalization from nearby locations or online channels, then compare expected net present value against alternative uses of capital. Make sure to cover customer demand, deposits, acquisition, operating costs, local demographics, brand value, digital spillover, cannibalization, and comparing expected lifetime value to investment. Question 19. Why do you want to be a business analyst at Capital One? Capital One appeals to me because it combines financial services, analytics, technology, and customer impact. The business analyst role is attractive because it sits close to real decisions: product strategy, credit risk, marketing, operations, and digital experience. I like roles where structured problem-solving and data translate into measurable outcomes. I am also drawn to Capital One's test-and-learn culture because it rewards curiosity, clear thinking, and ownership rather than analysis for its own sake. In your answer, talk about Capital One's data-driven culture, technology orientation, customer focus, financial services impact, learning environment, and why the analyst role fits your skills and interests. Question 20. Give an example of how you would communicate a complex analysis to senior leadership. I would lead with the answer, not the methodology. Senior leaders need to know the recommendation, expected impact, confidence level, and risks. I would present the key drivers visually, using only the analyses that support the decision. Technical details, model diagnostics, and data caveats can go in the appendix. For example, instead of walking through every regression output, I would explain the business insight, what action it supports, and what metric we should monitor after implementation. Be sure to mention executive summary, business recommendation, key evidence, assumptions, risks, visuals, avoiding unnecessary technical detail, and tailoring communication to the decision audience. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.